Welcome to another episode of Beyond the Plan. Today we're diving into a topic that can provide significant financial relief for the sandwich generation, leveraging the disability tax credit. The sandwich generation refers to adults who are simultaneously caring for their aging parents and supporting their own children. This dual responsibility can be financially and emotionally challenging. One way to ease the financial burden is by taking advantage of the disability tax credit. And working with clients, especially clients that are in the sandwich generation, I always check to see if the disability tax credit would be applicable for them or someone they know. In fact, it's usually brought up in every review meeting with our clients. Most people haven't heard about this tax credit, so I try and help people understand how it works, the potential benefits, and you know what? Nothing makes me happier than when someone is approved for the disability tax credit. The disability tax credit is a non-refundable tax credit designed to help individuals with disabilities or their supporting family members reduce the amount of income taxes that they owe. To qualify, the individual must have a severe and prolonged impairment in physical or mental functions as certified by a medical practitioner. The disability tax credit is available to individuals with a wide range of disabilities, which includes physical, mental, and cognitive impairments. A common misconception is that you have to have a specific medical condition to qualify for the disability tax credit. But in fact, eligibility is based on the effects of the impairment on daily life, not the specific condition. So you may be eligible for the disability tax credit if a medical practitioner certifies that you have a severe and prolonged impairment in one of the categories, or a significant limitation in two or more categories, or you receive therapy to support a vital function. So the disability tax credit reduces the amount of income tax payable by the individual or their supporting family member. It can also open the door to other disability-related benefits. The credit is non-refundable, meaning it can reduce your tax payable to zero, but it won't result in a refund if the credit exceeds your tax liability. Immediate family members, such as parents or spouses, can claim the disability tax credit if they provide support to the disabled individual. So a lot of people assume that if they receive other disability benefits, then they're automatically eligible for the disability tax credit. And really, eligibility is determined independently from other benefits. So you must apply separately and meet the specific criteria for the disability tax credit. I recently worked with a client who suffered significant occupational hearing loss several years ago. And after reviewing his tax return during our annual meeting, I was surprised to see that he didn't have the disability tax credit on his tax return. I explained how it would benefit him, and I suggested that he bring the application with him to his annual appointment with his audiologist. And even though I wasn't certain that he'd qualify, I encouraged him to apply and see what happens. He was thrilled when he received a refund of $15,000. The disability tax credit can provide substantial tax savings. For the 2025 tax year, the federal base amount is $10,138 with a supplement of up to $5,914 for those under 18, which is reduced if childcare expenses are claimed. This can translate to significant tax relief, especially when combined with provincial credits. By reducing the tax burden, the disability tax credit helps families manage the additional costs associated with disabilities, like medical expenses, assistive devices, and home modifications. It gives access to other benefits. Qualifying for the disability tax credit can make individuals eligible for other programs, such as the Registered Disability Savings Plan, an RDSP. And although the RDSP might not benefit seniors, it may provide long-term financial security for children and adults. On average, individuals can expect to save around $1,500 to $2,500 annually in federal taxes alone, depending on their income and the specific provincial credits available. It can be a significant relief for families managing multiple financial responsibilities. If an individual was eligible for the disability tax credit in previous years, but didn't claim the disability amount, they may be able to claim it going back up to 10 years, which may provide a substantial tax refund. A lot of our clients are in the sandwich generation, and for some, they're in a club sandwich. And that's when someone is caring for multiple generations at once, like elderly parents, adult children and grandchildren. And I think it's crucial to dig deeper and understand what's really happening in our clients' lives and what challenges their extended family may be facing. I often ask clients important questions like, do your parents have any health concerns? Do your parents require physical or financial assistance? And how does that impact their family financially and emotionally? Do their children or grandchildren have any health concerns or limitations? And how does that impact their family? This is a great conversation starter to see if they or someone they love may qualify for the disability tax credit. For seniors, the disability tax credit can be particularly beneficial. It helps reduce the financial strain of managing disabilities in retirement. Seniors can use the tax savings to cover healthcare costs, home care services, or other essential expenses. Additionally, if part or all of the disability amount tax credit can't be used by the taxpayer, it can be transferred to a spouse, common law partner, or other supporting taxpayer, providing further financial relief for those in the sandwich generation. A couple of months ago, I met with a client whose wife suffers with cognition issues. After learning more about how this impacts her daily life, I explained how the disability tax credit works, how it may benefit them, and I suggested that they apply. And it turns out that she was approved for the disability tax credit going back 4 years. They were notified that they will receive a refund of approximately $7,000 in the next couple of weeks. If a child has a disability, the disability tax credit can help reduce the financial burden on the family by lowering the overall tax liability. If your child is under 18 and qualifies for the disability tax credit, you can benefit from the child disability benefit. This tax-free monthly benefit could be used towards essential expenses like education, extracurricular activities, and daily living costs. And you can use the funds to invest in the child's future, such as contributing to a registered education savings plan, an RESP, or a registered disability savings plan, an RDSP. To apply for the disability tax credit, the applicant and medical practitioner need to complete the Disability Tax Credit Application Form T2201. I recommend reading through the forms so that you can advocate for yourself when you're speaking with your medical practitioner. If the medical practitioner charged a fee for completing the Disability Tax Credit application or for providing information, you may be able to claim the fee as a medical expense on your tax return. The form is then submitted to the CRA for approval, and the average turnaround time to process the application and receive a notice of determination is about 8 weeks. Make sure that you check off the box on the disability tax credit application form asking the CRA to adjust previous returns. In summary, the disability tax credit is a valuable tool for the sandwich generation. It offers substantial tax savings, financial relief, and access to additional benefits. If you or a family member has a disability, consider applying for the disability tax credit to ease your financial burden. If in doubt, it doesn't hurt to apply and see if you or your loved one qualifies. If you're part of the sandwich generation, don't miss out on the benefits of the disability tax credit. Let's connect to ensure you're maximizing your tax savings and securing your financial future. That's all for today's episode of Beyond the Plan. Thanks for tuning in. Don't forget to like, share, and subscribe for more financial planning insights. Take care.